Stocks rallied to end the trading week yesterday, helping to recover from what has been a horrible month for a stock. The Dow, Nasdaq, S&P falling roughly 3% in March. Joining us now, Wells Fargo Investment Institute head global market strategist Paul Christopher. Paul, good to see you. Investors have concerns over technology. You name it. First, it was higher inflation and interest rates. Then it was trade. Then it was technology. But you say what we're seeing is just not to worry about. Tell me more.
Yeah, that's right. There are some signals that are indicating some little bit tighter liquidity and financial conditions. Banks are paying a little bit more to borrow from each other. The credit default swaps on some of the larger banks have gone up a little bit lately. They're not outside of the band or the range that they've been in over the last 8 or 9 years, but those are the sorts of things that you look for late in the cycle. So the question is, are these little things brush fires, or are they the beginning of a forest fire for markets? We think it's the former. We think these are mainly the result of the Fed gradually tightening liquidity and, frankly, the tax overhaul, which is leading firms to bring some money home from overseas, and that's tightening financial conditions a bit at European banks.
Yeah, Paul, one of the interesting things that I noticed within the last week here is the economic data got unbelievably better. I mean, we saw GDP revised up. We saw the durable goods reports last Friday. That was the GDP report was even before tax policies came through. We're seeing earnings are going to go up by at least 15%, estimates of 20% increase. And then what have we seen? The cost of capital has come down even in spite of, the Fed raising interest rates. We're seeing the 10-year Treasury go to 2.74%. Yeah. We're seeing the dollar go down. How does the stock market not end up 15% from here? Where are your year-end targets? I think this is going to go back to earnings coming up in 2 weeks.
Yeah, it will, exactly. We agree. But for example, the market's worried right now about tariffs. For perspective, we're talking about $37, maybe $40 billion worth of tariffs. On the other hand, the market has just finished taking out all of the pricing in that they did of the $800 billion of fiscal stimulus that's still to come online this year. It's only starting now. So the market's forgetting about the $800 billion benefit in order to focus on the $37 billion hit to the economy. It doesn't add up. But we think you're right. The economy will strengthen and so will earnings.
But Brian, this is what starts happening in a market that is fully valued, if not overvalued, that it doesn't take much to really create waves.
Well, yeah, and Paul, I want to go back to this tech question for a second, because I think Dagan raised an interesting point earlier. She said, are we seeing people fundamentally reassess the value of some of these market-leading technologies in our lives, like social media? Is that fundamentally changing, and does that mean a trajectory change for companies like Facebook in the months, in the years ahead, or is this really just a blip? I mean, how fundamental is this reassessment of what we've seen from companies like Facebook?
Yeah, I mean, bottom line, you've had a shift in leadership. Financials and tech were leading the way. They've stumbled a little bit because of the interest rates, because of the concerns about privacy that you mentioned. But we think that the longer-term trajectory is still very solid for these companies. I mean, imagine all of the companies that form the tech sector. Are all of them affected by privacy issues in the same way as the ones that we've seen so far? We think not. My kids are still going to be buying Apple products. They're still going to be watching Netflix for months and years to come. So that fundamental trajectory, we think, is still intact. But it just has to be a little bit of repricing. To
Apple's credit, to Steve Jobs' credit, and to Tim Cook's credit, that they actually are a much more principled company. And if from the get-go, in terms of rolling out these consumer products, been extremely careful about protecting people's privacy. And I hammered Apple as they fought with the FBI over opening the San Bernardino terrorist phone. But that's why they fought so hard for that, because that is their belief at that company's core. And that is very different from Facebook, its lack of principles, and the way that they've treated customer data. Paul?
Yeah, I mean, there's differences among these companies. There's even differences in how they use data. There's a lot of data that's collected that's used in an aggregated form at places like, at some of these bigger companies, Google, Amazon, and so forth. So it's not that the information is not all used in the same way at all these different companies. You have to take account of that. And I think the market will get back to that.
Yep. Paul, thank you. Great to see you, Paul Christopher. Take care.